If you look at it globally, there has been a slowdown, and we are well aware of that. There is a little bit of that rub-off that is happening in India. Having said that, if you look at where India is today, it's in a very strong position. This is driven off strong fundamentals, where the underlying performance of the economy is good. You see a geopolitical position where India is in a very strong position and the youngest population, and which is leading to a very strong consuming class. This is leading to India being in a strong position. Yes, has there been a slowdown? Of course, there's been a slowdown compared to what it was over the last couple of years. But I personally believe that there is going to be a lot of growth in the economy. You'll see PE community especially. VC to a lesser extent, given the slowdown is more marked there. PE community will continue to invest more aggressively. And you will find a lot of the strategics and global corporation begin to invest more aggressively in India. And I think that's what's going to lead to a lot of growth in the country. One other small thing I wanted to highlight, which I think smart investors have always done, is this whole fundamental fact of counter-cyclicality. If you look at what Warren Buffett says, he says, be greedy when world is fearful. Be fearful when world is greedy. So I think a combination of that is what we have always been very careful of. That we basically,
Yeah. And do you expect India's resilience, and India's being kind of an outlier in this aspect among the major global economies, to help correct the slide?
I would say my personal view is there is a reason why India is now a topic of discussion in every global boardroom. The resilience of the economy, the performance of the economy is visible to everybody. If you look at the central government balance sheet, stronger than than it's ever been. If you look at the corporate balance sheets, a lot of cleanup has happened. A lot of people have paid back a lot of their debts. They're healthier than they've ever been. That's why they're investing a lot more than they have ever invested. If you look at it, basically, the individual balance sheets, that's never been a challenge in India. People have always invested and borrowed much less in India. And then the last thing is the bank balance sheets, probably stronger than ever before. Every bank is giving, I would say, record profits across the board. So I feel India is in a very good position. We feel very strongly about that position. That's why you see in the last 1 year, we've invested in 6 companies.
Okay.
Right from doing an incremental investment in Lenskart, ASG, Oasis, Avance, Oliva, Perfios, K12. We've invested in a bunch of these companies because we believe this is a great time to start investing in India and be more aggressive in India. So that's
6 companies. So what's the outlook on deal-making activity in 2024? And if you have to pick up, I won't ask you about 3 companies, but I can ask you about 3 sectors.
Sure.
Which will be your favorites in 2024?
So I would say, if you look at the deal activity, it's a very important question. And I think everybody has been talking about it, thinking about it. From a deal activity perspective, see, public markets are already open. If you remember, they were closed till 6 months back. There are more IPOs happening, record IPOs happening, IPOs are doing very well. So public markets are already open. Private equity is definitely started using more traction. People are being careful, yes, people are being careful. But I do believe that the traction on private equity, investment in private equity for good companies. So there's a big flight to quality in IPOs and in private equity.
Yeah.
VC is probably a little bit slower, and rightly so. I think it's good for the industry to slow down. There was just too much capital in that industry. It'll help a little bit of slowdown. Companies go back and focus on profitability. I think that'll help that industry. So I feel deal-making activity will pick up. And I personally believe the wild card is going to be the global corporations. There was a quote I was reading, which was from the Unilever report, where they said the speed of the clock for India has increased. So they're basically saying that the change has happened in India. And you see there is going to be much more focus on India, much more activity around India. So personally quite bullish about what is happening on the deal-making side. You wanted me to talk about 3 sectors, right?
Yes.
It's difficult to pick, to be blunt with you. But personally, I feel if I were to pick today, I would go back to the bellwethers for Kedara. So consumer and its derivatives have been our very important sector for us. Consumer tends to be a little bit more expensive in India, but it also provides a lot of growth. So if you can invest in market-leading companies in consumer, you can create disproportionate value. Like you and me, we both are wearing Manyavar, and we've seen the growth that Manyavar has delivered on. And that's what those kind of companies in consumer are very interesting companies. When it gets too expensive, then we start looking at derivatives of consumer. We start looking at packaging, logistics, all those kind of things. So that's one that we like a lot. Second one will always be financial services. It's a levered play on the economy. It grows at roughly 1.5. The industry grows at 1.5 times, but in that you have to be careful. Like we like monoline financial services businesses focus on retail lending. We like that much more. And of course, insurance. I like that a lot. And the third and last, which is a little bit of the counter-cyclicality view, is the whole tech services. I feel while people are saying there's slowdown, yes, there is slowdown. Yes, global spending is slowdown in tech services. I personally believe it'll come back very strongly in the next year. So those three would be my pick if I had to pick.
Yeah. So this Diwali, if you want to look back at 2023, and what would you say Kedara could have done differently? It could be a strategy you can go back and can tweak, or it can be an investment you made or an exit too. What would that be?
That's a very, very interesting question. We always reflect on what we can do better. And I think we'll be only a good investor if we continuously reflect, continuously try and improve. Personally, I feel every day is a learning exercise for us. Every company, even the best companies, never go up like this. They always go through some challenges or the other. You have to work with them. You have to work with the entrepreneurs. You have to find how you can address some of the struggles the companies are going to have. So we continue to improve and learn. And we always thank God because frankly, I always believe luck plays a much more important role in investing than skill. Skill is important, but luck is very important. So I would say the continuous learning is there across every single company. We go deeper and deeper into every sector. Like I was telling you, to us, financial services is no longer financial services. It's very specific subsectors. Same thing in consumer, very specific subsectors that we like. So that has always been the case for us, that you learn, you improve. I wouldn't say we wouldn't have not done what we did. I would say we would continue that. That I would say maybe we could have been a little better prepared for some more IPOs in our portfolio company. But I feel companies should go public when they are ready. You should not rush companies into public.
Going ahead, are there any sectors you picked in the past and you'd like to avoid in the future? A tough question.
It is a tough question because what happens is, like we were saying, you need to adapt in a country like India. What is good today may not be good 5 years down the line. So you have to understand when to enter and more importantly, what price to enter. So I'll give you an example. Today, till 3-4 years back, pharma and healthcare were looking like great sectors. I feel from a long-term perspective, they are brilliant sectors. But today you have to take a pause. US is a difficult market. There's a concentration of customers there. The bargaining power has moved there. So you have to be careful whether you want to invest in that sector where is US centric. Now domestic formulation is a great area. On the other hand, India has to do better in medical devices. Medical devices is going to become a core. It's going to become an important sector. So that is a very interesting opportunity that one needs to take advantage of. So you could find some very interesting companies coming in that area. Similarly, we have taken a call to invest behind single specialty hospitals because we find it's a replicable box model, which is easy to replicate, easy to build, and you can continuously replicate it. That's why we have invested in 3 such companies in eye care, skin care, and IVF. And we feel that's a very interesting area. So I would say it's continuously evolving, continuously changing.
Yeah.
But look at the long term, look at the trends, and be very careful because when we invest in a company, on any private equity firm invest in a company, we are taking a 5 to 7 year view. We're not looking at the next 12 months.